The ultimate restaurant stock tier list. What is happening, investors? It is your boy Jack. I am not a financial advisor. I got the t-shirt to prove it. And today we're going to be doing a tier list video. We haven't done one in a little while. If you haven't seen one of these videos in the past, essentially what we do is we go to one particular sector or industry and we rank about 10 different companies on a scale all the way from super amazing up at the top down to stay away. And I've been doing a little bit of research into some restaurant stocks lately, and some of you guys have been really interested in my thoughts, so I said, let's make one of these videos. So there is 10 companies to go through today. I tried to keep things really quick so the video doesn't go on all day long, so there won't be any in-depth analysis or anything, but I'll give you a brief idea of each company and what I think about them. And I just want to say from the start, in general, restaurant stocks aren't going to be, very big on growth. Now, there are certain exceptions, which you will see in today's video, but the main reason I'm personally looking into restaurant stocks is to try to get involved in some value plays, so just keep that in mind. But anyway, guys, right before we get into the video, can I please ask you to smash a juicy like, as it genuinely helps me so much. The support has been insane lately, guys. I appreciate you so much. Please do drop me a comment down below. Let me know if you're involved in any of these restaurant companies or any other restaurant companies whatsoever. I'm really interested in hearing from you guys. And of course, if you are new around here, hit that juicy red subscribe button, people. Join the family. We're like 24,000 subs and strong. Let's get it, people. The road to 50k is on. Anyway, guys, with all of that being said, let's get straight into the video. So here is absolutely everything we're going to be going through. We have McDonald's, Domino's, Restaurant Brands International, Chipotle, Darden, who we actually covered a little bit yesterday. We have StarBucks, the Cheesecake Factory, another one that a lot of people are speaking about right now, Texas Roadhouse, Wendy's, and Yum. So we're not going through them in any particular order, but we are going to start with McDonald's. So this is one that every single person in the whole world will know exists. Now, you may not know the most about their stock, but you know McDonald's exists. When I first started investing, McDonald's was actually one of the first companies that caught my eye. And I bought McDonald's right about here, at about $176 a share. So we've done okay here. We're up nearly 20%. They also have that nice dividend yield of 2.4%. On the 5-year chart, okay, for McDonald's pre-crash, we were up over 120%, which is nothing to sneeze at by any means whatsoever. And when we look at the Mac stock chart, guys, I mean, there's just been an awful lot of growth, really. I mean, it has its stages where it's sideways, it has its considerable dips, but if you're holding McDonald's for any considerable period of time, you can expect some very nice returns. But as far as restaurant stocks go, it doesn't get more established than McDonald's. It does not get more well known than McDonald's. They have a fantastic growth history. They still have a nice dividend. They're performing well, all things considered. I really like them. And as a value perspective, as of right now, I still think this price is decent. Now, I think it was a lot better down here. I'm not really planning on adding to my position in McDonald's, but when it was around 170 or so, I was very happy to add. It is the kind of one where anything could happen in a short period of time, okay? But realistically, the longer you hold McDonald's, the more likely it is you will make a considerable amount of money. It's that simple. So for me, as far as restaurant stocks go, I'm going to be putting McDonald's up into amazing. I really like them, and I do actually own them. Okay, Domino's Pizza. This one's a bit weird. If we look at Domino's on the 1-year chart, people, okay, we're actually up 76%, which for any company out there is absolutely insane, but especially for a restaurant stock. Now, the thing about Domino's in comparison to most restaurant stocks is that the pandemic didn't hit them all that hard, okay? Because, you get a Domino's, generally you're getting it delivered or it's a takeout. A lot of Domino's don't even have places in their restaurants where you can sit in and eat. So their business wasn't as heavily affected as a lot of other places where generally people go and sit down to eat their food. And with that being said, even at this price point, they're trading at a PE ratio of 36.4, which is obviously quite high, but it's not that high. It's not that much higher than the S&P right now. And it's a restaurant stock who on the 5-year chart is up 291%. I mean, this company has done absolutely incredibly. So, I mean, look at this, guys. Domino's Pizza US same store sales soared 16% as more consumers ordered delivery. So this could be one of the restaurant stocks who actually benefited off of the Roni when a lot of their competitors were completely taken off of the market for prolonged periods of time. Domino's stepped up. I mean, they smashed EPS at $2.99 versus an expected 2.24, and the revenue was an extra nearly 10 million. But with that being said, at these current price points, I most certainly would not be very confident getting involved. If we look back at nearly the last 4 months or so, it's traded very sideways. Not a lot has happened, people, and I personally think it may just be a little bit too pricey right now. With that being said, I think long term, yes, it definitely is going to grow. Do I think they can keep up this rate of growth? I really don't know. I would like to show you this as well, where there was like a year and 8 months period where Domino's was down and trading sideways. It's not always just insane growth. And so because of that, and because of the current valuation that I'm seeing, and the fact that this growth ultimately will slow down as the world gets back to normal, it's one of the companies who benefited at the start but might not necessarily going forwards. I just think it's either going to stay very sideways or maybe even trickle down. But with that being said, from a long-term perspective, I'm going to put them into quite good. Okay, Restaurant Brands International. So Restaurant Brands International owns 3 of the most prominent and iconic quick service restaurant brands: Burger King, Tim Hortons and Popeyes. 6-month chart, okay, these guys are still down 18.2%. From the very bottom, there's been a nice return of over 76%. We go back to the 1-year chart though, and we were downtrending before the crash even happened. On the 1-year chart, we're down 28.13%. And if we go to the 5-year chart, okay, we can see there was 100% growth in about 4 years, which is definitely very good. But again, that was followed by a massive downswing, and now on the 5-year chart, there's been 38.41% of growth. So their quarterly revenue fell 25% to $1.05 billion in the last quarter. Tim Hortons same-store sales plunged 29.3%, and Burger King's 13.3%. Popeyes did very well, up nearly 25%. But all in all, overall revenue fell 25%, which again, in the restaurant industry right now, can be normal. Have to be honest though, guys, I don't really have much interest in these guys at all. As of right now, from the research I've done, I don't have any intentions of investing in them. They have some potential, they do. I'll throw them into mid-tier. Okay, Chipotle, one that you're more than likely are aware of. The reason I say that is because it's currently at $1,200 a share and has seen some really nice growth on that 6-month chart, up 31%. And if we go from the bottom, we're actually up 161%. And there is also rumors going around of a stock split happening here. As of right now, I think it's just complete and utter speculation, but yeah. Now the thing is, let's go to the 5-year chart. Okay, nothing happened for about 4 years, and what I mean by that is bad things happened. It was trading down and down and down. It's only in the last year or so that anything started to happen. Now, if we go back to the max stock chart, we can see there's been ups and downs all over the place, plenty of times. And now's a good time to point out that the PE ratio is at about 135. Now, in their last quarterly report, we had adjusted EPS of 40 cents, which was above the consensus estimate of 35 cents. Revenue decreased by 4.8%. Now, that did beat projections, but still, the fact that it decreased and we've seen such a spike. So their digital revenue, okay, increased 216.3% in the quarter. That accounted for 60.7% of total revenue. And again, this was by people stuck at home, targeted advertising, and new delivery partnerships with Uber Eats and Grubhub. And they do have a very strong balance sheet right now. They have $935 million in cash and equivalents with no debt. But again, guys, does this to me justify this kind of a run-up? No, it really doesn't. In fact, it would worry me. And one thing that Yahoo Finance does tell us, right, is the fact that shares outstanding are currently at 27.97 million and the float is 25.97 million. And it tells us that the percentage of shares held by institutions is at 92.16%. And the short percentage of shares outstanding is only at 3.98%. So maybe I am underestimating the company here, but for me personally, I'm not interested at these price points. I just think anything could happen. And again, I'll put them into quite good, to be honest, but still, I'm not personally interested. Okay, Darden, I won't spend too much time on these because I spent about 8-9 minutes speaking about them in yesterday's video if you want to check that out. But I do think these guys could be offering a very good opportunity. On the 6-month chart, we're still down over 30%. And what I will say about these guys is that they definitely are a value play. I'm not invested just yet, but right now, they're more than likely the next restaurant stock I would add to my list. I do have to do some more due diligence, okay, but for now, I'm going to put them into amazing. And again, if you want the information on why, you can just check out yesterday's video. Okay, Starbucks, another company everybody's going to be aware of. I now actually own 1 share in Starbucks. Trading 212 now has referral links in Ireland, so if you're from the EU, there'll be a link in the description if you want to click it. We both get a free share, but I now own 1 share of Starbucks. What do I actually think about them? So 6-month chart, we're still down about 12.5%. The recovery from the very bottom, we're up close to 40%. So, you know, pretty average here. A little bit of an underperform in general. But that to me is not necessarily a bad thing, specifically if I'm looking for good long-term value plays. Now, the thing is, the yearly chart, we can see it's been downtrending for an entire year, and it's down 18.3% on the year. We go over to the 5-year chart and we can see it was just so sideways for 3 years, and then we got this absolutely massive, and I mean massive boom, okay, which was about 100% in a year, let's say. And then not a lot's happened. I know a lot of people get excited about Starbucks. I know there's quite a few investors even on this channel in Starbucks. I have to be honest, guys, they don't really interest me too much. I know that they're a massive company and I know they have, you know, a lot of prospects and it's very easy to expand, etc. But that's been the case for a long time now, okay? And in the last 5 years in particular, it's just been relatively lackluster in all honesty. I mean, 5-year chart, 25 odd percent, maybe you could argue 30%. That isn't it, you know, that's not really what I want to see. Now, I could see the argument, okay, the last time they got out of the Great Recession, we went on this absolutely incredible run over the coming years. But keep in mind, this is when they really started gaining popularity as well. I mean, they weren't a massive company back here in 1995. And the fact that with this in mind, they're trading at a PE ratio of 71, I just don't see the growth potential. Now, I know a lot of people will disagree with me, and that's absolutely fine, but I'm a very practical investor. Like, I like to see things happening that make sense. Obviously, the money side of things is all really important, the earnings, etc., etc. The numbers are all incredibly important, but if it just doesn't do what I want it to do practically, I'm not very interested. The global coffee chain reported fiscal third quarter net loss of $678.4 million, okay, down from net income of $1.37 billion a year earlier. So I mean, guys, I could potentially have some interest in this stock if, you know, we get a prolonged drawback. If we come down in value considerably, I would consider. But right now, at these current prices, I'm not interested at all. And so it's for that reason I'm going to put them into mid-tier. I do expect a lot of people to disagree, and that's completely fine. Everybody's entitled to their own opinions, but that's where I'm going to put them. Okay, right, Cheesecake Factory. I've been getting asked about these guys a lot. I'm going to find it difficult to answer this one because I am still in the process of doing due diligence. A lot of you guys will know the situation right now. Jeremy's spoken about them an awful lot. On the 6-month chart, we're still down 37.94%. And again, this is a company where I find it really easy to just practically evaluate it. Now again, we go to the 5-year chart, people, and it was a bad story. I mean, even pre-crash, down 21.94%. And again, another example of a restaurant stock where last time we came out of the Great Recession, and it went on a really nice run to the upside over the next 10 or so years. But since then, it has been coming back down massively. I mean, again, about 3 years, down over 57%. I like what they're doing. I like the position they've gotten themselves into from what I have seen so far. I think I agree with Jeremy and the general consensus that this could be a $40+ stock within a couple of years. After that, I don't know where I see this company going. I mean, they traded between $40 and $60 for a very considerable period of time. If things get back to normal, I see no reason why they can't break into those ranges. And don't get me wrong, that would offer, even at these current price points, a very, very nice return. At these current price points, about $26, I still think there is anywhere from maybe 50 to 120+% returns within the span of 2 years potentially, which is obviously fantastic, but I don't think it's necessarily the safest place. And again, I find it difficult to know what's going to happen after those couple of years are up. Now again, I'm in the process of doing DD, but for the time being I am going to put them into amazing because I do just think that short-term return is absolutely fantastic, and I think the likelihood of it happening is quite likely. My mind may change later on, we'll have to wait and see, people. I will keep you guys up to date. Okay, Texas Roadhouse. So another one, we're on the 6-month chart from the highs. We're down a little bit, down about 14 and 11%. Another one who from the very bottom we're up nicely, up over 100%. Another one with a weird 5-year chart. I'm not enjoying these restaurant stocks 5-year charts. Okay, so in a span of a few years, up 100%. The following year or so, down 35%. Then we saw what we saw with a few restaurant stocks so far, a massive spike pre-crash, and then we got hit horrifically. Now these guys obviously IPO'd at a relatively unfortunate time, okay? The Great Recession came soon after. They lost about 61% of their value, and again, just like pretty much every other restaurant stock, they then did go on to see some absolutely immense growth. We are currently trading at a 69.84 ratio. So all stores remained open with Texas Roadhouse, okay? They reported on March 19th that it had closed no domestic restaurants. All of its locations are operating at full capacity or with takeout options depending on the location. And they even ramped up their to-go program, which everybody has. They reported $107.9 million of cash on the balance sheet with no debt at the end of 2019. And then since then, the company's drawn down $190 million under its revolving credit facility, raising its total reserves to over $300 million to ride out the crisis. And management noted it still has the option to increase liquidity under its credit facility to an additional $200 million. So they beat EPS by 12 cents recently, but the EPS is still negative 48 cents. And they beat revenues by 1.67 million. Now we can see the consensus here is to get back to a positive EPS as early as the next quarter, which could well be possible. I have to be honest, guys, I'm quite liking the look of this company, but I wouldn't be confident enough to invest just yet. I would have to bang them into quite good. Okay, 2 more. Wendy's up next. Wendy's is one on the 6 month who has performed well. Okay, down less than 10%. From the bottom, incredible, up nearly 200%. So we're nearly back to a 5-year high. I've only done brief research into Wendy's. From what I've seen, I'm not personally interested at all, in all honesty. So I'm actually going to put them into meh. They could be mid-tier. I don't really care about them at all though. Okay, and we have Yum brand. They operate KFC, Pizza Hut, Taco Bell, The Habit Burger Grill, and Wing Street worldwide except in China. But KFC, Pizza Hut, and Taco Bell are the big boys. So 6 months out, okay, we're still down a little bit, 11.2%. From the very bottom, we're up 65.61%, which is fine. We're currently at a PE ratio of 28.11. 5-year chart, okay? We were seeing some nice growth, some decent growth up until here. Nothing insane, but decent. And on the max stock chart, it's just been steady growth pretty much forever. There's been very few considerable dips. Obviously, we have the Great Recession. We have something that happened here, okay? There's been some dips, but there's been an awful lot of nice growth. All in all, there's a lot of room to run with this company. I don't think we're ever going to see immense growth. It's just not that kind of company. We would have seen it by now. As of right now, about 95% of the company's restaurants worldwide are now at least partially open. Same store sales were down 15% for the company overall. This is obviously in reference to their last quarter's earnings. Over 34,000 of its restaurants offer delivery now, up from about 30,000 at this point last year. They opened their 50,000th store in 2019. So like, to me, just seeing the price action that's happened and the PE that we're still at, I wouldn't feel confident investing. Yum, I think I will also put into meh. Okay, now we have to put everything into order, and this is going to be difficult for the amazing ones in particular. I actually think I'm going to put Darden first because I do honestly see the most growth potential here. They haven't bounced back as hard yet. They're still, in my opinion, at a decent price. Then McDonald's, and then Cheesecake Factory. Now, when I do more DD, Cheesecake could easily come here or here. Quite good. The order that I would invest in would be this. It would be Dominos, then Chipotle, then Texas. Mid-tier, if I had to buy one of these companies, it would probably be Starbucks. And if I had to buy one of these, it would be Yum. So that is exactly what it would look like, people. So guys, there we have it. I do hope that you enjoyed, got some entertainment, and also, you know, took some sort of information on some of these companies from the video. It is always tough making these videos. Everybody's always going to have different opinions. You know, if you disagree or if you think I missed an important piece of information, feel free to let us know in the comment section. And one more time, just thank you all so much for the support, especially over the weekend. It was insane. A lot of work was put in this weekend between the 2 interviews and all of the double uploads, so just seeing it rewarded means the world to me, so thank you all. And with that being said, guys, I hope you all have an absolutely fantastic day. I will see you for the next video. Peace.